Welcome to episode number 85. I'm your host, Tamera, and today my special guest, Nick Klein, is going to talk about property insurance right after this.
Welcome to the Closing Table with host Tamera, where we break down how to be successful in real estate and what it's really like to work in the real estate business. This is the Closing Table with Lawyer's Title.
Welcome back. Again, my special guest today is Nick Klein. He is the vice president of the HI agency. He's been in the insurance industry for 19 years, and I'm really excited to talk to him about what is going on right now with the insurance industry because we all have questions. We're hearing a lot about changes in insurance. So I think this is going to be very valuable content for my realtor audience today. So welcome to the show, Nick Klein.
Thanks for having me.
Let's see. I've known you for, I don't even know how many years. Like the Ebby days.
Probably 17 years.
Well, I've only been 15.
Okay,
it's 15. I just hit 15.
Because it was foundation work and you're in my house.
That's right.
That's where
and my dad has your brother still deliver firewood to his house.
That's a true story.
So they have land.
In Central Texas.
In Central Texas, yeah. So y'all go out there to hunt and chop down trees.
Wood.
So back when I had a wood burning fireplace, which I don't have anymore, we used to have you guys come over and bring us some wood.
True story.
It is a true story. But that's not why we're here today. Let's focus. We got something very important we need to talk about today.
Okay.
So let's start with an overview of just kind of where we are in the state of insurance today.
Yes. So insurance is tough right now.
Insurance is tough.
There are companies, and I know we'll get to this, that are choosing to back out completely out of the state. They're non-renewing policies based on certain risk, certain density. There's a lot of things going on because insurance companies in North Texas in particular have not been profitable the last couple of years. If you think back to 2021 with the freeze.
That's where it started with Snowmageddon.
Correct.
Yeah.
Because insurance companies, for the most part, have been able to rate for wind and hail losses. And even though Texas, unlike many other states, we get wind and hail every single year. It's just how bad and how much, right? But that freeze really was statewide, and it put insurance companies on their head from a profitability standpoint.
It was catastrophic. It was absolutely catastrophic.
Right.
For
and
2
so
weeks.
For 2 weeks, and then you follow that up with storms again in 2022.
Yes, we did have another round. Not as hard, but
not near as bad because we had power.
Yeah,
that's all another deal. But we that was not as bad. But then that followed up with the wind and hail that we received over the last couple of years as well has caused insurance companies to be not profitable. And when they're not profitable, they got to fix some things. So that's where we are now.
Yeah, that stuff is crazy. I mean, I feel like our winters have gotten a little, I don't know, every time I say this, someone says, no, you're just not remembering, but it feels like it's gotten harsher, and that we've had some more of that kind of stuff. I mean, I had a friend, so I'm on a grid with the fire department, so my power doesn't go out.
Nice.
Not trying to be a brachiosaurus. But I had a girlfriend, she's in her house, like going and getting water from her pool to dump in her toilet so it would flush, wearing her mink coat, trying to stay warm with the car running with the phone being charged. You know what I mean? It was crazy.
That was tough.
It was crazy. So with Snowmageddon was the start of it. Mm-hmm. And then we've had some other catastrophes that just keep piling on, right?
Correct. Yeah. So we've had significant wind and hail. I mean, to say that in the past, I think 6 years, we've had 2 significant wind losses in a tornado in Highland Park and University Park. Like, who's ever heard of that?
Oh, yeah. I forgot about that one. Not for a long time.
In a dense populated area, we had a tornado roll through Royal Lane. I mean, that's crazy.
It was terrible. Yeah.
Crazy.
It was crazy.
With, $100 million storms is not that crazy of a number in DFW on a somewhat regular frequency with these wind and hailstorms that have come through the past couple of years.
Well, and those houses and businesses down there, I mean, that land is not cheap.
No.
So, and neither are those houses.
No.
So that probably add to the cost, the exorbitant cost of those houses and that land down there. And to begin with, I mean,
absolutely,
the value of those houses is really high.
Which means that the claims are that much higher.
So one of the things that I'm hearing of as a result of what's been going on is that the 1% deductible is going away.
That's a big thing right now.
It's a big thing people are talking about.
Yes. So I will say that 1% is not completely gone. So we do have some carriers that will still offer a 1% for a new business. And then a lot of people are grandfathered in on their current policies to stay with a 1%.
Yeah, I think I'm grandfathered in.
Which is nice, right?
Yeah.
But of course, there's a cost associated with that. Some of the carriers are offering 1%, but they're changing to an actual cash value schedule.
Explain.
So, to be not too technical, but I'll take my house, for instance, in Wiley. It was last replaced with a massive Wiley hailstorm in 2016.
Okay.
That happened like 3 weeks after we closed on brand new construction.
Oh, good grief.
And then the roof got totaled. Okay, so now I have an 8-year-old roof. What that means is that in the event of me having a 1% deductible in actual cash value, they would depreciate my roof by now almost 9 years. Okay, depending on the carrier, that can vary, but some are doing 3, 5, 7% per year. So you can see how
a lot.
Potentially a 9-year-old roof, and just at 3%, that's 27% off the total, plus your deductible.
Plus your deductible.
Okay, so again, we're talking about some specific things. You need to look at your specific policy to confirm, but that's a really big deal, because what people don't realize is many consumers are kind of obsessed with the 1% compared to a 2%. But the thing that's nice about a 2% with replacement cost is you know exactly what you're responsible for, right? You have a $400,000 house, 1% deductible, that's $4,000, right? We can all do that math. 400,000, 2%, that's an $8,000 deductible. Okay. What if it's a 400,000, 1% actual cash value? Well, that would depend on the age of your roof at the time of loss, the condition of your roof at the time of loss, but you really don't know what it actually is until the claim happens. Whereas if you could go 2% and replacement cost, you know, I've got $8,000 that I'm responsible for a loss.
So 2%. So we're looking at 2% replacement cost versus 1%
actual
cash value.
Now, again, these are all things that could be part of your policy. You could have a 1% replacement cost. That's great, but it's worth it to check to see, because if you were to look at my personal home in Wiley, the money that I would have saved going from 2016 to 2024 and having a 2%, I would have probably more than offset any cost had I had a claim. Since I haven't, it would have just been money in my pocket, right? But who would have known that in 2016, Wiley wouldn't get hit again until now?
It's really interesting because, you know, I've had some lender partners on the show recently, and we've been talking about credit card debt and affordability and things like that. I mean, so when we're talking about like a 2% replacement cost, you did the math on 400,000, we said $8,000. $8,000. I'm wondering how many Texans does that still put in a hole?
Right. And that's,
you know what I mean?
And that's the scary part whenever you project this looking forward, is what does that do? Let's say in an attempt to get your policy more affordable, because we're at a time now where it's actually having people make decisions on how they pay for things, right?
Yeah.
Their insurance is
it's
expensive
ridiculous
enough
right now. Yes.
Right. So what do? Well, the easiest thing is to increase your deductible, right? That's the easiest way and quickest way to save money on your premiums. Right. The premium is something you have to pay to keep it active. The deductible, you don't have to unless you have a loss. Right. So what that can do potentially is, when you look at it from the real estate side in a transaction, what will the mortgage underwriter allow? How high of a deductible would they allow the buyer to have? That's one thing you have to know, right? You need to know that, because we can't go at a 5% if the lender won't allow it. And then 2, let's say they do allow a 2 or 3%. Well, that client, if they don't have the money to pay for that, and they have a loss, where do we go? Do they just let it ride? They put it on their credit card. They let it ride. Do they wait till they're going to sell it?
Yeah, they don't do anything.
Right. So that goes to a whole nother topic of clue reports, why they're going to be even more important in the future. Because if you have a big deductible, you have actual cash value, you can't afford to replace your roof, because maybe your deductible is so high that it's higher than the cost to replace the roof, right?
Oh my gosh.
So you could potentially have a 0 paid hail claim where the roof is totaled, but it's 0 paid because the insurance carrier didn't pay any money out. Well, that's really important for your new buyer to know that there's actually a totaled roof.
So curious, does this mean the days of the roofer covering the cost of the deductible?
That's a good question.
Sounds like those days are gone.
Well, I get that a lot from my own clients and from others. I get roofers coming by the office a lot saying that they will offer that. And I think 2019, they made that to where that was not legal for the deductible.
Yeah, but that doesn't mean that people...
That's correct. But what I actually was dealing with a client yesterday, and the insurance carrier that he's with, a client of ours, was required to submit proof of a deposited check to the roofer for the exact amount of the deductible.
Oh, that's interesting. Okay.
Before they would release the holdback money that he had.
Okay.
So that is a very common practice with insurance carriers.
We're not getting around that anymore. Yeah.
They shouldn't. It is illegal, and roofers have been fined. So I think it's, again, you got to be careful because for them to eat that type of cost as deductibles get higher, what is it that potentially isn't being done for your roof, right? That's what's important to know.
Well, I wonder, isn't that part of the cause of why some of this is happening? Like, because when a hailstorm hits, here come the trucks and the door knockers. They get up on your roof. They're, oh, yeah, you need a new roof, right? They're like, we can cover the deductible. It's not going to cost you anything. So all these roofs are being replaced, whether or not they need to be. I mean, couldn't that be the cause of some of this?
That's for sure part of it, is the fact that insurance carriers were potentially writing checks for roofs that weren't completely totaled. So there's more and more that we have seen where, because hail is directional and the slopes of your house, depending on where it hit, there could be a whole half of your house that was completely untouched by hail, just based on how it came in. You know, normally our storms come from the west to east. And if it's falling in at this direction and you have west-facing slopes, it is hitting that. But the other side of it could be virtually untouched. In the past, there's been more and more carriers just write a check for the entire roof. And now they're saying the other side was completely undamaged. So that's really important to know, because when they're looking at significant losses, they want to make sure that they've kind of sharpened their pencil. And one of the ways to do that is not pay for roofs that weren't totaled.
Yeah, I think I haven't had a roof replacement at my house in Salina.
You better knock on wood.
Well, 100%, 100%. But we've had hailstorms, but they've been like the little pea, or I think we had one that was quarter. I mean, it sounded like the guy was up there with the baseball bat. For sure. Scared the living daylights out of me, a peanut, at like 4 o'clock in the morning. But I've had people check my roof, just to make sure I don't have any leaks or anything like that. I haven't had to have a roof replacement on it yet. It's not, I understand that you need to do this kind of dumb, but I really don't like it. It's really obnoxious to have your roof replaced.
Right. Well, I mean, you need to. That's why you have insurance. But you doing exactly what you said is very important to all the realtors that are listening. Make sure you have a roofer that you trust. I love, because getting up on a roof is not free. It's not easy. Yeah. But having a roofer that you trust, that's insured, that's local, that you can send business to whenever it does need to be replaced. Right. Having them come out to inspect, because you don't want to just call your insurance company every single time pea-sized hail shows up in your neighborhood. Right. Right. But it's worth checking, because you never know.
Yeah. You don't want leaks.
You don't want leaks. And it is your job as an insured to mitigate any further damage, which means to not let it just ride it out and see how many storms we can get, right? So it's your job to do that. But having a roofer that you trust that can come out there and not sell you a roof, but can tell you the actual damage is very important.
And these guys are out there.
Yes, they absolutely are.
100%. Okay, so I have another question for you. Okay. So all of our properties have gone up.
Yes.
Are we all underinsured now?
It is possible.
I looked at that. We started looking at some of mine yesterday. I'm like, ooh. I was talking to my dad about that, and I was like, ooh. Like, the last thing we want is our premiums to go up, but we also need to be fully insured.
That's correct, because cost construction has gone up. Now, we kind of peaked in 2022 where the market was silly high as far as construction. Yeah. We've cooled off from that, but it's still something that has gone up year over year for the most part. basically for forever.
It's interesting how the contractors never go down in prices, even though the market's cooled. It's weird how that, like the price of a pool is incredible to me.
Yes,
so,
they're proud of those. But but to your point, you definitely need to do that, because we had somebody, a client that had a lightning strike with a total loss. House burned down.
Ooh.
Now, it wasn't, as you probably know, with lightning and the fact that they're here in DFW, most houses don't burn down to the ground. But when you put that much water in them to put them out to save the neighbors, it's as much water damage as it is fire. Smoke and water is usually a larger loss than the actual fire itself. Yes. And so you want to have coverage. That dwelling A coverage is what your insurance carrier on your policy would be covering for the dwelling itself. So making sure that that number is sufficient in order to fully reconstruct your home from the ground up is very important, right? Like you said, we're looking to save money on insurance, but you also want to just be writing a check for your deductible in the event of a loss, and God forbid a total loss, right? You don't want to have that and then go, oh, we're about $150,000 short for what it will take to replace this home. That's the last thing you want. So it's worth looking. Hopefully your agent's doing that. If not, just know we're here to help as well. But regardless, that's something easy. You can just look. If it says $485,000 for your dwelling, and there's new construction in your neighborhood, the same size and everything, that's $950.
Yeah, you need to take a look. Yeah.
Yeah.
So are insurance companies exiting the market in Texas?
They are. There are some that are exiting. Usually it is the smaller companies, the ones that show up and say, man, look at these big premiums in Texas. Yeah. Let's go here. And they're here for about one spring. Oh my goodness, this hail is serious business here. And they leave. There are some bigger carriers, some competitors of ours, some of our companies that are either non-renewing policies or not offering new business. That's not what we want. You probably can imagine that competition is a good thing. And regardless of the size of the competitor, it's very important that we have a large array of companies in this market. So there are some that have not many completely exiting, but maybe exiting certain segments, saying, we're not going to do any more investment property policies, or we're non-renewing investment property policies, stuff like that. Why?
I guess I'm not tracking. What's the thought process?
It depends, but some carriers believe that those rooftops are not. It's just the number of rooftops, right? Whether it's a home or an investment property, hail doesn't care, right? The bottom line is that for the most part, recently in Texas, auto has been more profitable from an insurance carrier standpoint. So just how many rooftops do you have in a certain location? Like how dense are you there to where a single storm could be $75 million in just this neighborhood, right? Or just this one zip code.
Okay.
They say, well, that's a little too much. We need to pull back the reins a little bit. So that's something that we're seeing. But again, it's just about it's profitability, right? If you're charging, if you're charging $5,000, but every single roof is $35,000, then you can't be paying out a bunch of roof claims in this neighborhood all the time, every 3 years, right? That's not a good business.
What is the biggest concern for insurance companies right now? Is it hail and windstorms? Is it ice storms? Is it hurricanes, or is it all of it? I mean, I'm sure all of it is an answer, but
it's probably all of it.
That's what I'm trying to ask.
Yeah, it's probably all of it here. And another thing that's interesting about Texas is we do get hurricane, where most of the other states that are at risk for hurricane don't get the wind and hail that we
don't also get wind, hail, and tornadoes.
Yes. So,
welcome to Texas. And now we have earthquakes.
That's exactly right. So we got a bunch going on here, unlike some other states. But the unpredictability of wind and hail, in particular here in Texas, is the
biggest concern.
Yep.
So another issue we're hearing a lot about is the potential for insurance companies to move to exclude coverage for roofs due to wind, hail, hurricane damage. Is this true? And how does this line up with what lenders are requiring?
Good question. So yes, there are some companies who are doing that, but a lot of them on the coast have done that for years, where they will specifically exclude wind. namely hurricane.
Okay.
And you would get a separate policy through a carrier that just does that, or the Texas Windstorm Association.
Oh, I bet those premiums are fun.
They're fun.
Yeah.
So because most lenders, as you can imagine, would not want to lend on a property where potentially their greatest risk is completely uncovered.
Yeah.
Right. So there are some companies in North Texas that are that you can offer the exclusion of wind. It's pretty rare, but usually those are for people who own their house and say, you know what, insurance is too expensive. I want to do something to save some money. We can exclude wind in some cases, and it does save them a lot of money. Puts potentially a big risk for your potentially most common claim, but it's out there. But yes, most lenders, there's no way they would allow that. Again, I'm not a lender.
So we don't
or
think it's a thing.
I don't think it's something that is not going to met with some sort of answer, which would be a wind or hail policy if that became more prevalent.
Okay, so the answer is it could happen.
It does already happen.
And if it and in those cases, they're two separate policies.
Correct.
Which makes
Florida
insurance premiums fun.
Yeah, Florida already has that, and has most coastal risks have a separate wind policy in a lot of cases.
Man, we're in a conundrum though, because like premiums have skyrocketed, right? So if you're talking about now two separate policies where this wind policy is, the premiums are not going to be easy to digest financially.
Probably not.
How do Texans afford houses in Texas? Oh my gosh.
Good question.
I don't expect you to have an answer to that, but now I'm frustrated.
Right. I think that for how we advise our clients every single day is we try to get creative with how to do things. Obviously, like we already talked about, raising a deductible is something that you can easily do. But do you have the money? So I look at it just simply as the math. Okay. So back to our scenario of going from a 1% on a 400,000 to a 2%. Right. That $4,000 additional dollars going from 4,000 to 8,000, right? That 4,000, what does that save you in premiums? Okay. If it saved you $1,500 or $2,000 a year, that's like a 2-year payoff, 2-3 year payoff. Now that is something I'm personally very interested in. But if it was an additional $4,000 out of my pocket, but it would take, it only saved me $200 a year, there's no way I would personally do that.
Sure.
Right. The payoff is too long.
Right.
I am bound to have a claim in that time.
Right.
Right. So I think that doing the math and not just saying, let's just go to 2% because it saves money. Let's go to liability only on our cars because it saves money. Yes, that does save money. But what are you risking? Like, what's the math on the risk that you're taking by doing those sort of things? And that's where we really try to hone in to get what people's true goals are. Because for some people, going to a 3% deductible means nothing to them. Mm-hmm. They got cash saved away.
Right.
And good for them, right? So why not save?
Yeah.
But for other people, that could really put them in a true bind.
That's most Americans right now.
Unfortunately, it's not. So that's why you got to play with it at least a little bit. But not get crazy, because the reason insurance is expensive is because the storms are happening.
So, what is a normal yearly rate increase on your premiums?
Good question. I talked to a client this morning, and his was 105%. So his premium went from around $6,000 to over $13,000.
Oh my gosh!
Yes, it's a $1 million house. It was already a 2% deductible, so there's a couple factors in there. $13,000. Yes. And people in Florida would be begging for a $13,000 premium if they're anywhere near the coast. And they're probably a higher deductible. So, but yes, usually we're seeing anywhere from 20 to 30, sometimes 50%. But that's not to say that us and obviously our competitors, people we get every single day, are at that, if not higher. So it really just depends. But the big thing is do you have an agent that's reviewing this to make sure you're covered correctly? Are you taking the steps to look at deductibles and things to get creative? Because again, the premium with that particular carrier probably is what it is with the coverages that you have. What can you do to adjust things to make it more affordable, but make sure you're still protected correctly?
Well, I know a lot of people are just shopping around, right? Correct. To find a lower premium rate. Right. Do we suspect that premiums will continue to rise at this rate. I understand it's affected by housing increases, right? Property value increases. But wow. I mean, obviously some of this is also storm, issues, right? So they're trying to make their money back. Do we suspect that they're going to keep going up like this?
I think that they will go up a little bit more, but I think that I absolutely believe that's light at the end of the tunnel.
Okay.
I think that the adjustments that they have made with deductibles, with some coverages, with obviously premium has caused it to where they are looking more profitable on their outlook. Forecasting this year, 3 years, 5 years, to where I don't think that we're going to continue to do this type of increase.
Well, okay. So I like it because now we have property tax caps or better caps, if you will, right? Or better exemption write-offs for the homeowners, depending on how you... Homestead exemption is now $100,000 as opposed to $40,000, right? Okay. And on investment properties, we have a 20% cap? Is that right? 20% cap? I think it's 20%. I should know. I look at my tax bill; it drives me crazy. So with the property tax savings in Texas, along with a light in the tunnel on these premium increases, maybe things are going to start to get better for Texans to afford houses in Texas, right?
I do actually believe that, and I hope so too.
Yeah, I hope so. I think the biggest thing that I have learned out of today is, and it's really interesting to hear you talk because our lenders friends talk the same way in that you need a mortgage advisor, right? Someone that's going to look at your overall portfolio wealth or health, and help you make decisions for buying a house or refinancing or whatever it is that makes sense for your family based on what your financial portfolio looks like. Insurance is the same.
Right.
I didn't realize that you are an insurance advisor in the same way that our lender friends are mortgage advisors. So I think having a really good mortgage advisor in your pocket and having a really good insurance advisor in your pocket is the key to all of this making sense for you as a Texan owning a home moving forward.
And the realtor, right?
Yes. No, I don't know. I would never leave out my realtor friends, but that goes hand in hand with my realtor friends for sure, my real estate professionals. But Nick, I hope that the audience will take a minute to give you a call and reach out and ask for some help and and gain some personal information from you, and then I hope that they will obviously work with you. But this has been a really insightful podcast today. So thank you very much for joining me. And if you guys need to reach out to Nick Klein, which I think everyone should, give him an opportunity to earn your business, but also give him an opportunity to take a look at your overall insurance portfolio and help you make some decisions that make financial sense for you and your family. We will make sure that his phone number and email address are also listed so that you can have an opportunity to reach out to him directly. But he is also tagged to my social media. So whenever this podcast airs, he will also be tagged so that you can contact him through social media channels. So thank you so much, Nick. I've really learned a lot today. I appreciate it. And it's not as scary as everyone thinks, which I think the outlook for this is not as scary as everyone thinks, which I think is also a really important ending place for our podcast today.
Absolutely.
So thanks again, Nick. I really appreciate it. Always good to see you. And that's a wrap on episode number 85. Again, I'm your host, Tamera Gady with Lawyer's Title. If you like my content, you're really going to love my escrow team. Give me an opportunity to work with you on your title needs and make it a great day.